This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Very good afternoon, everyone. Carol Massar, Tim Stenivek, live here at Bloomberg headquarters. We're streaming across YouTube, Bloomberg Originals, and of course on TV and radio. And on a day where, the labor market, the U.S. labor market, Tim, front and center.
Yeah, certainly that's the big question that everyone has. Less so about what the Federal Reserve does later this month, but more so what the Federal Reserve does later this year. And if indeed, as the president has been criticizing the Fed, they are too late when it comes to interest rate policy.
Yeah, it's also timely. We do have strong evidence, though, that with the U.S. labor market slowing, we are seeing pressure on the equity markets. We're hovering near our lows of the session. You've seen rates move lower, bonds move up in terms of pricing, but those rates backing off on those greater expectations, if you will, that we get some kind of rate cut in just about 1.5 weeks' time. So coming up, we're going to talk all about the labor market. Constance Hunter, chief economist at the Economist Intelligence Unit, EIU, will be with us in just a moment.
Yeah, we're also going to be hearing from LinkedIn COO Dan Shapero. And we're going to get into U.S. rates, Carol, because the reaction on the rate side of things is, obviously we're talking about stocks, but we're watching rates really closely, especially to the front end of the curve.
Exactly. And then we're going to get into the tech bromance that we have seen underway at the White House, and also a possible $1 trillion payday for Elon Musk. So a lot coming your way over the next 60 minutes. First up, though, let's get to the trade and your top business stories. Here is Charlie Pellet.
Right.
Welcome back.
Hi, thank you very much. Great to be back with you guys. As always, got to begin with a developing story right now. Keeping an eye on shares of Kenvue. They are plunging by 11.4% right now. Kenvue shares lower after the Wall Street Journal reported that Health Secretary Robert F. Kennedy Jr. is likely to link the company's Tylenol painkiller to autism. The report from Kennedy is expected this month, according to the paper. Again, Kenvue right now, KVUE on the ticker symbol, plunging by 10.7%. A down Friday, Jobs Friday, a bleak jobs report. The Dow, the S&P, NASDAQ 100 index, and now the Russell 2000 index, all trading lower. S&P down 40, drop there of 0.6%. We do have the Dow down 327, drop there of 0.7%. S&P down 40, down 0.6. NASDAQ down 0.3. The NASDAQ 100 index down 0.2%. The 10-year 4.08%. We've got the 2-year at 3.49%. The 30-year 4.77%. Gold up $50 the ounce, up 1.4%. $35.96. Major sell-off in West Texas. Intermediate crude down 2.7%. $61.74 a barrel. And Bitcoin now up by 0.2%. 110,622. Again, repeating the earlier story involving Kenvue. Kenvue shares falling after the Wall Street Journal reported that Health Secretary Robert F. Kennedy Jr. is likely to link the company's Tylenol painkiller to autism. Kenvue shares down now by 11%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much for that update. All right, we want to get to what is really our top story on this Friday. And there's a lot going on, but we have seen some coolness in the U.S. labor market as a result of that data point we got at 8:31.
Well, it depends. It depends.
This morning.
I think we were pretty on time with it. We got a notice, though, just ahead of that number that there were some technical difficulties. That's something that is kind of new to me.
It's definitely new to me as well. It's not the only time, but I think
this was on the government side, by the way, not on the...
No, not on the Bloomberg side.
Not on the
Bloomberg
side.
It definitely, though, did mean a new narrative and reset when it comes to U.S. rates. Let's get to that part of the story. Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey with us from New Jersey. Ira, just the whole morning and how it played out. Unusual? What was top of mind for you there?
Well, it was kind of funny, right? We got all those information that around 10 minutes after 8 that, hey, the number might be delayed. That's happened before. It's been a long time, but it has happened before that you've had delayed numbers because websites break, things like that. So I think they were teeing us up for it being late, and then we ultimately got it right on time, which was a little interesting.
Yeah.
But yeah, weak numbers across the board. You look at the revisions. June, we actually had job losses in the non-farm payroll series, right? We haven't had one of those for quite a long time. And and you just see job momentum has slowed so significantly over the last 4 or 5 months that it's a foregone conclusion at this point that the Fed's going to cut. Now, the question is, and I keep on reminding myself, last year we said the same thing. I said the Fed's going to cut rates, are probably going to cut 100 basis points, but it's going to be over 4 meetings. Wound up, they did a 50 basis point cut in September. That's some of the talk that I'm hearing from investors right now, that they're wondering, hey, is the Fed going to cut 50? I do think personally the bar is pretty high for the Fed to cut 50 in September, but we get a weak CPI report, and maybe they do. The chances, I think, of a weak CPI report are pretty low, though. So 25 basis points is done. Now the question is October, December, January, March, and then do they go more? And that's where I think we need to start focusing on, is that terminal rate. How far are they going to cut to? Are they going to go to only 3%, or are they going to go to like 2.5%?
The criticism from the Trump administration for months on Jay Powell has been that he has been too late, that the Federal Reserve has been too late. Is the president vindicated with a report such as this?
Well, maybe one meeting, quite frankly, because if you look at the preponderance of data that was coming in the first half of the year, right through the May numbers altogether, they really weren't bad, right? And so inflation still remains stubbornly high and above the Fed's 2% target. So the question always becomes, the Fed has a dual mandate. Do they care more about the employment part of their mandate, or do they care more about the inflation part of their mandate? And I think at this point they can say employment's what's important, because if the employment situation stays where it is, so very weak but not disastrous, or weakens further, right? So you start to get negative payroll prints, wages start to come down. You did see wages. That what worries me about this report more than even the payroll number was the fact that wages started to moderate. That's super important. But now you're at the point where, okay, look, if the job market gets really bad, we don't have to worry about inflation because prices are going to come down anyway, because consumption is going to go down. So I think that now it's clear and obvious that they have to start cutting interest rates. Wasn't so clear in June. August, or the July meeting, you could argue maybe they could have cut. But I think that if I'm a Fed governor, if I were in their seat, June, I probably wouldn't have been cutting personally.
Well, one thing they certainly want to avoid is any kind of stagflation. Constance Hunter is with us as well, chief economist at EIU, the Economist Intelligence Unit, here in our studio, going to join in on this discussion. I saw you nodding your head a couple times. Jump in on what we got this morning.
So, if we look at that headline number, 22,000 looks really weak when we think about what would be replacement rate historically. However, as Powell talked about in his Jackson Hole speech, right, we have a decline in supply, that is the decline in the amount of people that are in the labor force, and a decline in demand. So that decline in the supply, which is now growing at like 0.2% year over year, if we sort of smooth it a little bit for 3 months, right? That is the denominator in the unemployment rate. And this is really, really important. We could keep growing at this pace. Unemployment rate's going to stay about where it is. So but as Ira was saying, consumption's going to weaken, because if you think about jobs growth, that's one of the things that feeds consumption growth. So there's a feedback loop where this slows consumption, slows demand, slows growth, and they're going to need to cut just to maintain that 4.2, 4.3% unemployment rate. But they probably need to cut a lot less than the market is thinking, given this shrinkage in supply. And if you ask me, that's what caused the big turnaround in equities today. People dug into the details of this number and realized, wait a minute, because of this shrinking supply, they might not need to cut as much.
So what does that mean to you? 25 basis points in September, and then that's it until 2026?
Oh, I think it's hard to know the exact timing. We think at least another 3 cuts over the next 6 months. It's going to depend on how sticky inflation is. What we've seen in core services, that's been remarkably sticky. So we're not even talking about the goods sector where we're seeing price increases, but everybody anticipates, dare I say it is going to be transitory. But the dirty word in economics, but it's that core good stickiness that I think if I were a Fed governor or a voter on the FOMC, that would keep me up at night.
Ira, is Jay Powell, though, feeling incredible pressure right now?
I don't know. I'm not sure if I can't get into his head, right? 'Cause I met Chair Powell a couple of times, but mostly in passing at events. I would imagine that the Federal Reserve is trying to be as neutral as they can and trying to look past a lot of the rhetoric coming out of the White House. I mean, you can't completely ignore it, right? For sure. But you look at Secretary Bessent, and if you look at his Wall Street Journal op-ed, which Mike just talked about with
Austin Goolsbee.
With Austin. Yeah, they were talking about in there. There's some, I think, legitimate criticisms of what the Federal Reserve's done over the past 15 years, but it also misses some of the reasons why the Fed did some of those things over the last 15 years. Yes, the government should be, doing things from the fiscal side that, back during 2007, 2008, we were waiting for Congress to do something. Congress didn't do anything. So the Fed had to step in because there was no action out of Washington. Right. So should the Treasury Secretary be more involved? Sure. Yeah, absolutely. Congress should maybe give the Treasury Secretary additional powers in times of financial emergencies and financial shocks to try and stabilize those so the Fed doesn't have to. Right. So there and some of those were built into some of the reforms that have happened over the last few years. So it's not exactly I agree with some of what Secretary Bessent said, and then other parts I think are much more nuanced. But nonetheless, like Fed reform, the Federal Reserve has not been seriously reformed for many decades at this point. And the world's changed, right? The financial world's changed. The markets have changed. So maybe there needs to be some type of, a shift. Now, should it be a complete overhaul? I don't think so. But
right.
Could there be, nuanced changes that Congress considers? Sure.
All right. One thing I want to get to, you mentioned Secretary Bessent, another key member of the president's cabinet, joined Bloomberg Surveillance this morning. We're talking about the Commerce Secretary, Howard Lutnick. He addressed reliability of the data coming out of the Labor Department. Here's what he had to say to our team.
It makes it crystal clear you should have fired the person who was running that group, right? Because if you didn't fire him 2 weeks ago, you sure as heck would be firing him today. So they need new leadership in BLS, that's for sure. They need new tech in BLS, that's for sure. And Donald Trump needs to rely upon the numbers. America needs to rely upon the numbers. You can't have these bent former administration people who have a view and who want to harm the president. We need accurate numbers coming from BLS, and finally we'll have new leadership to deliver. You fire the person, what do you learn? You learn that their technology is just, oh boy. But we'll fix it. We'll fix it.
That was, of course, U.S. Commerce Secretary Howard Lutnick this morning on Bloomberg Surveillance. Mind you, he does not oversee the Labor Department. He is head of the Commerce Department. But what we care about, Constance, is U.S. data, economic data, has been the gold standard. Is the data coming out of these departments still reliable?
Yes, I think it is. I think it's going to take. Yes, it's still reliable. And the person, by the way, who is the acting secretary, Bill Wojciechowski, he has been acting secretary in the past. He has been there a number of times. This glitch that we had, while worrisome and concerning, but is not unusual in a world of technology. Who amongst us has not experienced technology glitches? Mm-hmm. I'm not saying it's acceptable or that we need to not have a very high standard, but I think that is the wrong thing to attach to. And if we look at the individual who's currently leading BLS, he has had this role in the past and there have been no problems or complaints. So it is a very robust system of the way we collect data. It's very robust in how we follow up with revisions. And the reason we have the revisions we have is because we want a timely read. That timely read is 90% directionally correct, right? And so it's valuable.
Yeah. Well, and I'm glad you went to revisions. I've only got about 30, 40 seconds left here. I mean, we are going to get a bunch of revisions next week, which will maybe show what about the U.S. labor market? Will our narrative change again? Just quickly.
No, it's still going to show probably some weakness because a lot of these revisions tend to be pro-cyclical. So as the market turns and the economy turns and gets weaker, then you wind up with weaker revisions, and then vice versa as well, right? Where you get upward revisions when the market's turned upward. But I agree. Like, I think generally speaking, the data that we receive is of reasonably high quality. The challenge is that the way that we collect data now has to be different because, again, the world's changed. And Mr. Lutnick does produce, his agency does produce a significant amount of data, like the Bureau of Economic Analysis, GDP data, the PCE report, all of those types of numbers come out of Commerce.
Let's not forget that. Folks, thank you so much. Great analysis on what we got early this morning and still continues to impact the trade. Ira Jersey, Chief U.S. Interest Rate Strategist at Bloomberg Intelligence, and Constance Hunter joining us right here in studio. She, of course, is Chief Economist at the EIU. When we come back, a Tech Titan soiree at the White House and maybe $1 trillion for Elon.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Strong evidence that the labor market is slowing, rippling through markets at this hour. The Dow, the S&P, NASDAQ, all in the red. Russell 2000 index of small cap shares bouncing between small gains and small losses. Higher now, up by about 0.1% on the Russell 2000. The S&P is down 32, drop there of 0.5%. The Dow is down 266, down 0.6, while NASDAQ, the composite index, down 42. A drop there of 0.2%. The 10-year at 4.08%, with the 2-year 3.49%. Gold up almost $50 the ounce to $35.94. That is a gain of 1.4%. A retreat for crude down 2.5%, 61.88 on WTI. And Bitcoin up 0.5%, 110,913 right now on Bitcoin. Alphabet's Google has been fined $3.5 billion by the European Union in order to stop favoring its own ad technology services in a move that risks further inflaming tensions with President Trump. Alphabet shares, they're up right now by 0.5%. Recapping stocks lower, S&P down 33 points, a drop there of just about 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, time to talk about the world of technology, because this, as we had kind of an amazing visual yesterday at the White House. Meta Platforms' Mark Zuckerberg, Apple's Tim Cook joining tech industry leaders in touting their pledges to boost spending in the United States on artificial intelligence. It was all during a dinner hosted by President Donald Trump that highlighted his deepening relationship with Silicon Valley. The execs making comments at the dinner, among them Apple's Cook, here in exchange with President Trump.
We are all different in some ways, but we all believe in the power of technology to improve people's lives, and that is the thing that binds us all together.
And Tim, how much money will Apple be investing in the United States? Because I know it's a very lot, and it's, you were elsewhere, and now you're really coming home in a big way. How much money will you be investing?
$600 billion.
$600 billion. All right. It's a lot of jobs.
We're very proud to do it.
That's great. Thank you very much.
Thank you.
Appreciate it.
Thank you, sir.
All right, Apple CEO Tim Cook last night at a dinner at the White House, along with other big tech leaders. Of course, you heard President Trump there. And Tim, that eye-popping image of those CEOs at the dinner. We also had an eye-popping story about Elon Musk as well. There's like a lot going on here.
Yeah. Okay. So let's talk about this. And with somebody who knows all about it, we've got Ed Ludlow with us. He's co-host of Bloomberg Technology on Bloomberg Television. And Monday through Friday, 11 a.m. Wall Street time. Check it out. Ed joins us from the Bloomberg News Bureau in San Francisco. First up, Ed, that meeting of tech CEOs. You had Tim Cook there. You had Mark Zuckerberg there. Sam Altman, Sundar Pichai, Sergey Brin, Satya Nadella, Bill Gates. Even members of the Trump administration who previously worked in technology or in venture capital, David Sachs, for example. What was the image that this portrayed of the relationship that Silicon Valley or technology or the biggest companies in the world has with the White House?
Well, there was another piece of news that came out with it, which is almost another quid pro quo, right? Which in that clip, you heard President Trump asking Tim Cook, the Apple CEO, how much are you going to invest, Tim? Oh, $600 billion. And the same was put to Mark Zuckerberg, who also said $600 billion. But the background comment the president had made is that tariffs for semiconductors specifically are coming. And it's those that have pledged to invest in the country that will be spared from them. That's why we look at it a little bit like a quid pro quo. But AI is at the heart of this administration's platform, right? Deregulating to allow for faster building of data centers. And those people around the table, bar a few exceptions, and missing people, those are the names that are leading on that front.
Yeah, it's interesting. It's funny. Tim and I were talking kind of before going because it's kind of a little bit remarkable to see these images. And I think there's at times been a love-hate relationship between the White House and Silicon Valley. What?
I was surprised to see Jared Isaacman on the list, Ed, because he was supposed to be administrator of NASA. He's of Shift 4 Payments, of course, somebody you've talked to and you know pretty well. What's good? The president pulled his name from the list and pulled his nomination. Well, why was he there?
I think it's important to tell the truth. I don't know why he was there. In chatting with Jared recently, I don't know that he's worked out what his next thing is going to be. On social media, which is a dangerous place sometimes, a lot of people would have observed that Elon Musk was not at the table. Mm-hmm. But they would say, oh, who was there representing Elon Musk? Surely it was not Jared Isaacman, because of the situation you just explained, and there were other people there at the table who also have connections to Musk. But yeah, I promise you that when next I speak to him, I will ask him specifically, how'd you end up at that table given the president's recent handling of your nomination?
On the Elon Musk thing, he was asked about this on social media. He replied to somebody and said, I'm not able to make it, but I will have somebody represent me.
That's what I'm alluding to, yeah.
I'm looking at the list right now.
Is that it?
I don't see a representative from Tesla or from SpaceX there.
Yep. I think that we're just going to have to let the reporting be done.
Okay.
And if we still care, we will confirm who Elon's representative at that table was on the night, but we don't know.
Does he really care? Because, I don't know, he might get a compensation package worth about $1 trillion. So is it really that important anymore? What do we know about this?
Yeah, I think it's been a very long day reading a 300-page document, and there's so much detail in it. The simplest way of putting it is $1 trillion after 10 years if a very large number and sequenced series of events take place. Tesla and Musk have to meet many operational and financial milestones for the full trillion to be realized. And there are many other safeguards and securities from Tesla and Tesla shareholder standpoint baked into the proposal that would keep Musk focused on the task at hand. We can get into them, but for example, in order to access the last 2 tranches of stock, Musk has to pay for them up front, almost like an option's being exercised at the price that the shares closed September 1st, but he also has to participate and sign off on the succession plan. So he has to work on his own successor in year 8, 9, and 10 in order to get to not just the reward from money, right? We're not talking just about compensation, but in his case, he wanted the voting rights as well. And they're staggered over that 10 years.
So who is this a win-win for? And I only ask because Tom Maloney has also put out a story at Bloomberg News and says that Elon Musk got this $1 trillion with genuine threats to quit Tesla. Mm-hmm. So was the company really worried about losing Elon? So was he in the driver's seat on this? Because this package sounds like there are some guardrails around Elon in a big way.
Yes, Tom Maloney has reported it beautifully. If you don't read the full 300-page proxy, read Tom's report. The committee representing the board met with Elon Musk 10 times in negotiation of this package. They delayed the annual shareholder meeting as they negotiated this package. They hired a number of outside firms and advisors to get the package at least over the line. I say over the line, it still has to be voted on by shareholders in November. Musk's point was, if you do not give me this voting power of 25% or greater, I will go and do the things that I'm interested in elsewhere, XAI, SpaceX, etc. What did the board get in return? Section A51 or page A51 of the proxy, point number 2. We have got reassurances from Elon Musk that he will wind down his political activity. So it's not sort of blanket all going to Elon. The board has made, including with the operational goals they've set for Elon, these are really hard. They've got things to protect them in making sure Elon Musk is focused at the same time.
Yeah, $8.5 trillion in market cap from $1.1 trillion today, Ed. How does Tesla get there over the next 10 years?
Yes, so Tesla has a market cap today of about $1 trillion, and one of the financial milestones for Elon to realize the full $1 trillion of comp is for it to get to $8.5 trillion. it's very interesting when you set that against the operational goals. The operational goals are very much in line with AI. Grow a robo-taxi fleet to 1 million units. Robo-taxis, 1 million taking people on ride-sharing platform. 1 million humanoid robots. But the board also tucked in there a goal for Elon Musk to sell 20 million Tesla vehicles total and deliver them to consumers. And it shows that the board fought to keep Elon Musk focused on Tesla's bread and butter business, even in the likelihood that that $8.5 trillion value in the long run is more closely aligned to the big robotics and AI stuff than it is in the sort of archaic business of building vehicles and selling them to consumers. You know, that's kind of how I think the market looks at it.
God, that's massive. Are we even crazy to think about an $8.5 trillion market cap for Tesla?
When I first moved to California in 2018, which ain't that long ago, right? NVIDIA was a company that made GPUs that for video game developers and went into high-end consoles and computers for video games. It was a few $100 billion. It's now a $4 trillion market cap company. It's the easiest example for me to cite over a period of less than 10 years of a company dumping in trillions of dollars of value.
Can I just ask you why all this stuff about Elon's compensation is happening now? Is it just they were having meetings and it's all coming out? Is there anything about the time or what?
Well, a proxy needs to be filed in advance of an annual shareholder meeting, right? Okay. And the annual shareholder meeting has to happen at some point. It's happening in November. So there's a chronology to it and the auditors have to prepare it. That's quite boring, but that's part of the answer.
One of the things we need to ask, too, is that the shareholders are going to decide, too, if Tesla should invest in his AI startup xAI. Significant?
Yes.
I mean, it does feel like Elon's rolling everything into one, or wants to.
This is a shareholder-initiated proposal. Many shareholders tried to get the proposal on the docket. In the end, they went with just one by a single retail shareholder. xAI... You can use Grok. I used it this morning, a voice assistant-based chatbot in Tesla vehicles. Bigger picture, xAI has a very different model to, say, Anthropic and OpenAI. Despite all the headlines about all the money those two AI startups have, OpenAI and Anthropic, they basically lease the data center capacity. They don't own the assets outright. xAI does. It's committing tens of billions of dollars to buy the GPUs and put them in a data center. So, you know, the rationale is that there's synergies, that the work xAI is doing on software can benefit Tesla owners and Tesla vehicles. But it's also a bit of a lifeline. And if you allow me to do the plug, I'm going to write about this in my newsletter and column on Monday, because, you know, that's the thing that shareholders also have to face. You know, does xAI on paper have the ability to stand on its own 2 feet? Or is this going beyond an investment by Tesla? Is it a bailout of one Elon Musk company of another?
And just in the last 40 seconds, to push back on this a little bit, as Mark Gurman has told us, some of the LLMs and the tech, there's a concern that this could be a bit of a commodity.
Correct, and also the benchmarking figures for Grok 4 are very good. But again, it's a business model-based thing. Elon Musk is committed to moving super quick, committing capital to buying GPUs, and the model's completely different. Again, it is not a binding proposal. It is a shareholder-initiated one. And if it's successfully passed in November, then the board needs to look at it and decide if it is a prudent and beneficial thing to Tesla to make that investment. But as I reported earlier in the year, SpaceX has put $2 billion into xAI.
Right.
So why not Tesla?
Oh, and by the way, Ed, you can promote anything you want on our air. You're Ed Ludlow. All right, we're looking forward to the newsletter. Shares of Tesla, by the way, up almost 4%. Ed Ludlow, co-host of Bloomberg Technology. Another view on the U.S. jobs market. The COO at LinkedIn is next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg Jobs Friday. Stocks selling off. The Dow, the S&P, NASDAQ are all declining. Strong evidence that the U.S. labor market is slowing is rippling through markets, driving stocks lower and bonds higher. The S&P down 31 at 64.70, down by 0.5%. Dow Industrials down 218, down 0.5%. The NASDAQ Composite Index down 51. For NASDAQ, a drop of 0.2%. The Russell 2000 30,000 index of small cap shares back in the green, up right now by 0.1%. The 10-year 4.08%, with the 2-year 3.50%, the 30-year 4.77%. Gold now up $48 the ounce, up 1.4%, $35.94, and West Texas Intermediate crude down 2.4%, $61.97 a barrel. Apple's annual sales in India hit a record of nearly $9 billion in the last fiscal year, signaling growing consumer demand for its flagship devices as the company ramps up its retail footprint in the world's most populous country. And of course, coming up next Tuesday, Apple's biggest product launch event of the year will introduce its next generation iPhone lineup. Right now, we got Apple little change, down under 0.1%. We continue to keep an eye on shares of Kenvue after the Wall Street Journal reported that Health Secretary Robert F. Kennedy Jr. is likely to link the company's Tylenol painkiller to autism. Kenvue shares are plunging by 15%. Recapping, S&P now lower by 0.5%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Businessweek Daily on this Friday. Carol Massar along with Tim Stanovic. We know the labor report certainly top of mind today, and we want to kind of stay on it for a little bit more because we did see job growth moderate materially in recent months, and openings have declined, weighing on broader economic activity. Just a reminder, in case you've been under a rock today, non-farm payrolls did increase 22,000 in August.
I mean, the range, that was a low end. The range, remember, was 0 to 144,000.
You highlighted that yesterday.
And nobody had negative.
Right.
But
no.
22, it's not good.
No, and those revisions showed employment shrank in June for the first time since 2020, that jobless rate ticking up to 4.3%. We got a good voice on this, Tim. Dan
Shapero is COO of LinkedIn. He joins us from Sunnyvale, California. Dan, you got great data on the LinkedIn platform. Was this report as shocking to you as I think it was to a lot of folks out there?
Well, the labor market right now, it's slow but steady. And I think that we've seen pockets of continued slowdown, but also pockets of strength. I think on a global basis, healthcare is probably the area of greatest positivity around the world. I think the conversation that a lot of people are having right now is about what's happening with new college grads, entry-level roles. There has been some reports of slowdown in the amount of entry-level hiring that companies are doing. And if you know someone that's graduating from school right now, perhaps you're worried about them landing their first role. And so it might take them a little bit longer. It might be a bit more competitive than we have seen in prior years. I think on the flip of that, one of the advantages that people coming out of college right now have is that companies are looking for people comfortable with AI tools. And oftentimes they find that new college grads that haven't been in the workplace yet, perhaps haven't developed all of their habits around the working world, they might be more flexible to adopt some of the new technologies that are so in demand and the skill set so in demand by employers.
So let's talk a little bit about this. Shout out to Kevin Gordon out at Charles Schwab. I saw him post a chart earlier in the day. This is the unemployment rate for those who are between the ages of 16 and 24. So those young people who you mentioned, Dan, that unemployment rate now at 10.5%. That's the highest it's been going back to April of 2021. So, you know, in the recovery of the COVID pandemic, or the sort of the peak of the COVID pandemic, a few months after that. What you talked about AI obviously being something there that's affecting this, but I'm wondering what that does for longer term career prospects if people early in their careers just cannot get off the sidelines.
Well, I think that for new college grads, there's definitely the process of landing your first job. But I think the thing that employers are really, really focused on right now is they're trying to figure out how to retool and upskill their workforces for an economy that is really focused on AI as a way that you win in your market. And they look at new college grads and people earlier in their career, and they're thinking to themselves, these might be the people that are more flexible, that are more fluent with AI, that really can help us go through the transformation that we know we're going to have to go through as an organization. So my advice to people that are earlier in their career is become fluent in AI tools, showcase to employers that you know these tools, that you can bring them into effect in your new work. And I think we're going to find that the people that build great careers are the people that use this opportunity as a chance to really show what they're capable of and help organizations go through a transformation that honestly a lot lot of leaders are nervous about.
What does it mean to be fluent in AI tools? Because 2 years ago, we were being told, hey, prompt engineer, that's the hottest job around. Well, guess what?
Yep.
Everybody knows how to be a prompt engineer now. So those jobs don't exist at all. What does it mean to be fluent in AI?
It's changing so quickly. In fact, there's this great stat we recently surveyed folks and realized that 51% of workers around the world, they think of keeping up on AI tools as like a completely other job that they're doing on top of their day job. And so what was hip and new 2 years ago is now becoming not what people are focused on. I think the key thing about AI fluency is that on a daily basis, you look at the things that you're doing and you ask yourself, is there something that I could be doing better by using AI? Now, if I think about myself personally, that might be writing the first draft of a presentation. It might be that I'm trying to get up to speed on new tariff legislation. And so maybe I'm not as familiar with that. And I want to use AI to help educate me on how this might impact the markets that I'm participating in. This is something that I definitely did earlier in the year, as there was a lot in the news about tariffs. So I think it's a mindset. There is a mix of understanding what tools are out there and what they can do, but also just to have a habit of bringing it into your daily work and honestly showing your colleagues around you what's possible when you find that nugget.
And yet, where is it that people need workers? Because we talk so much, Dan, about folks who are building power plants to meet the demands of AI, the energy demands, that there's not the engineers around. If you need a contractor or a plumber or electrician, they're not around. So I don't necessarily see the AI connection there. I mean, where else are there the disconnects maybe in our labor force? And how is the pushback against immigrants impacting the ability for people to maybe find workers that they need for different types of jobs?
Yeah. I spend a lot of my time talking to heads of HR and talent at companies in the US and abroad. And, even though hiring has slowed, they consistently still say that one of the biggest challenges that they have is finding great talent for whatever skills they're looking for. Sometimes those are skills that might be more out in the field. Sometimes those are more corporate roles. But there is still an insatiable need to find great folks. And one of the products that we announced earlier this week is we believe that agentic technology, it's going to change how people do their jobs, but it's also going to change how companies hire. And so we launched a product called Hiring Assistant that is all about helping recruiters find talent that they otherwise wouldn't have been able to find, and really allow organizations to find that person that meets the needs of their skills. And in some cases, that's going to be a role where AI skills are a core part. But in other cases, it'll be the kind of roles that you mentioned, where it's more about building the power plants that facilitate this major boom we're seeing in data centers.
Hey, I am also curious what you're seeing about compensation. And we did get a read, certainly that within the monthly jobs report this morning. And we did see average hourly earnings come in. Let me just look here. Month over month, up 0.3%. Year over year, up 3.7%. Some concerns, though, about we're starting to see some softening when it comes to wage gains. What can you tell us about what you are seeing via the platform when it comes to compensation?
I don't have any unique data to offer on compensation per se. I know that one of the things that a lot of people are reporting on is that hiring trends have slowed, but wages have maintained fairly stable. So it'll be interesting to see if that persists. I do think companies are looking at their P&L and they're trying to figure out how to invest in AI tools while continue to build the teams they need. And so in some cases, they're looking at the number of the people that they're hiring, but they're also looking at their compensation structures.
All right, gonna leave it there. Hey, listen, thank you so much. Dan, have a great weekend. Dan Shapero is Chief Operating Officer at LinkedIn, joining us from Sunnyvale, California on this Jobs Friday.
Hey, taking a look at markets in the red right now, down 0.5 percentage point on the S&P, the S&P 500, the Dow down just about the same, the NASDAQ down 0.2%. When we come back, stocks on the move with Isabelle Lee. That's next on Bloomberg Businessweek Daily.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Businessweek Daily. Carol Massar along with Tim Stenivek. Let's take a look at some stocks on the move today. With us, the one and only Bloomberg News cross-asset reporter Isabelle Lee here in the house. Where would you like to begin?
The one and only MicroStrategy, or Strategy, tickers MSTR. So the stock has fluctuated.
MicroStrategy.
I know, me too.
Oh, is it called Strategy now?
Yes.
Shoot, how did I miss
So in
that?
headlines, it looks like Sailor's strategy, but his strategy is to buy Bitcoin. So the stock has fluctuated.
The strategy's simple.
It's very simple.
Use leverage. Buy Bitcoin.
Okay, so the stock is now down, up 2%. It was down earlier, so fluctuating between gains and losses. But why are we talking about Strategy today? Because it's emerging as a new contender to be part of the S&P 500.
Nice.
So that is a big thing. They recently emerged as a candidate, and this is a scenario that seemed far-fetched just a few months ago. So what changed? Last quarter, they had a $14 billion unrealized gain, and this delivered the profitability requirement for the index eligibility, in theory, under current rules. So S&P is different from other indexes because there's a little bit more nuance there. There's what they call committee discretion. So even if a stock is eligible, it doesn't mean it'll be included. In fact, a lot of these sell-side shops, they have at least 20 in their list. But of course, Strategy is the one that gains attention. And it's really interesting because if admitted, passive funds would have to buy 50 million shares, approximately $16 billion. And of course, do I even need to mention that this is a big win for crypto bros in
Just
the space?
supply and demand,
Would be.
right?
It would be a big win if it happens. We should note Coinbase and Block are already in there, so there's sort of like this fintech idea that maybe this could work.
That is true, but an analyst told me that it's hard to ignore a player this big. So the minimum threshold to be included in the S&P 500 is 22.7 billion. MicroStrategy or Strategy is nearly 100.
Yeah.
It's really wild. But I must say again that there are almost 24 eligible companies, but Strategy is, of course, the one gaining.
In AppLove and Robinhood Markets, Carvana. It sounds like you know a lot about this. Maybe you have a story that's among the most read on the Bloomberg terminal.
Hopefully it's among the most read.
That focuses on this exact thing. So check that one out if you want more information there. Broadcom.
Wait, am I crazy?
Wait, okay.
So
you don't
back
want to go to
in
Broadcom yet.
2022, MicroStrategy was like a $14 stock.
Yes.
Like I know that doesn't mean anything.
Well, go back and look at Bitcoin and what it was doing then.
Okay.
That's the whole point.
I know. I don't know.
Quick side note. MicroStrategy is already in the NASDAQ 100. But arguably the S&P is a much bigger stage, almost double in size, so still. It's a big deal.
And it means even if you don't want to own Bitcoin, you're going to own it if it joins the S&P 500.
And because of the cold logic of investing, Vanguard, who we know has eschewed digital assets, they're one of the biggest holders of Strategy.
Just kind of wild. Hey, speaking about what investors are holding on to today or buying into, this is your number one gainer in the NASDAQ 100 and S&P 500. We are talking about Broadcom.
Broadcom, ticker is AVGO. So it's helping OpenAI design and produce an AI accelerator that will start shipping in 2026. So this is a lucrative sphere that is really dominated by NVIDIA. So obviously, Broadcom investors are cheering the move. You see their biggest intraday rally since April. And of course, you see NVIDIA slump, their biggest intraday since at least May. So the order of the accelerator total more than 10 billion. This is a big deal. OpenAI is really experiencing a lot of shortages, and now they're actually broadening out. They used to be only exclusively with Microsoft, but now they're broadening out to Oracle, CoreWeave, and Google.
Fascinating story, right? Like, look at how these cycles are just moving so quickly, and who might be, I'm not saying NVIDIA's doing just fine, but it's just a reminder.
You're not always on top.
Correct. And may not stay there forever.
Yeah,
Speaking of cycles, is athleisure in some sort of cycle right now?
Lululemon, ticker's Lulu, it's down almost 20%. That's after they cut their outlook, disappointing investors for the third straight quarter. Yes, and their shares hit the lowest level since the onset of the pandemic, and investors are so spooked that at least 7 analysts downgraded the stock in a single day, pushing the share of buy recommendations on the company to the lowest since 2014. And I love Lululemon personally, and a lot of my peers do. I mean,
the quality is pretty, full transparency. Well, no pun intended.
That you're going back in time.
You're going to have to Google.
That's the Chip Wilson era.
If you can't understand that. But I agree that I think the quality of what they have is great.
Of my leggings from my college days, which was yesterday. No, I'm kidding.
No, but you still have them, right?
They're still great. Yes.
Yeah.
But the pushback on this is that, they were early to market and they sort of created this market. Now there's so much competition in the space. And you walk around New York City in the summer, and what do you see people wearing? It's not necessarily Lululemon.
It's not dominated by Lululemon anymore. And consumers are becoming...
Sweaty Betty.
Yes, everything. And wow, you're very aware. I love it.
That's what I hear.
Consumers are now more value focused, and they're kind of, I don't want to say overpriced, but they're expensive. They're almost $100 for a legging. So
isn't all that stuff expensive though? Like the companies that I just mentioned.
No, but it rarely goes on sale.
I guess
Lululemon.
Yes. Caroline, our stuff.
Okay.
Yes. And they're also affected by tariffs. So just very quickly, they're affected by the de minimis exemption. This is where low value shipments under 800 will now be taxed. And of course, I mean, if you order leggings, you'll expect that to be taxed. So that's obviously affecting. And Lululemon also lowered both the revenue and EPS outlook. So tough times for Lululemon.
Could also be that Lululemon stuff just lasts so long there, right? That you don't have to replace it so often.
Oh, that's true. Great point.
Maybe. I have stuff that's so old and I've had forever. Thank you so much, Isabelle Lee. Check out Stock Movers, our 5-minute episodes. Biggest winners and losers in the stock market. Find it on Apple, Spotify, or anywhere you get your podcast. For those watching on TV, the close is coming your way, but we continue on Bloomberg Businessweek now.
Yeah, we got Dr. Misty Hegnes coming on, talking all about the jobs report and Swiftonomics. That's next on Bloomberg Businessweek Daily.